Hi, I'm Andrew Vieira, and I'm branch manager of WealthWise Mortgage Planning and the voice behind VALoansofCalifornia.com. In today's video, we're going to talk about the VA Jumbo Loan, more specifically how the VA Jumbo Loan compares to a conventional jumbo loan. So first, the definition of jumbo when it comes to VA is really any loan amount that is above the conforming loan limit. So the conforming loan limits, they will change annually, usually around November. As this recording is happening right now, we're at $548,250. So anything above that for this recording is jumbo. Now, when it comes to conventional financing, if you're looking for a jumbo loan and you weren't considering VA, you're going to most likely have to put 20% down on a jumbo loan, on a conventional jumbo loan, okay? That's kind of how those work, and the restrictions are much, much tighter. On VA, here's what I'm going to tell you right up front. All things being equal, and I'm talking about if you decided you were going to put a down payment, you have to on conventional, and you're going to put a down payment down on a VA, which technically you're not required to, you will qualify for almost 50% higher purchase price if you're buying a house, or if you had 20% equity, you would qualify for almost 50% more loan amount. Okay, and that's by virtue of the fact that the VA loan guidelines are very, very broad, right? So here's a quick comparison. If you're talking about the credit score, FICO score, if you want to think of another term, the credit score that you need on a conventional jumbo will be in the 700s, okay? On VA, it can be in the low 600s, and every lender has a different minimum credit score that they go by, but conventional 700s, VA 600s. If you're thinking about debt ratios, and what the debt ratio is how much your monthly payments are currently that we see on your credit report, debts that you have, the payments, and your payment that will be generated from the loan amount, including your taxes and insurance and homeowner association dues if you have that. The conventional limit is going to be way down here in the low 40% of your gross monthly income. On VA, because of the calculations we get to do, and there's another calculation called residual income, that's really our Bible when it comes to qualifying people under VA. Conventional in the low 40s, VA 50% can even be higher, maybe is 60% because of the calculation. So right there you can see that conventional, our little bucket is small over here, and on VA it's very, very large on how we can qualify. Loan to value, we've talked. As of January of 2020 with the Blue Water Vietnam Veterans Act, there is no longer a loan limit for VA if you have full entitlement. All right, full entitlement, one way you have full entitlement is if you've never used VA before. Okay, so full entitlement, there is no loan limit now. You can buy as much as you want with no money down for whatever amount that you qualify for financially. We talked about the debt ratio, if that's how we're calculating it. The lender, however, is going to have a limit on how high they will go on loaning you the money. With our company right now, our standard guidelines say we can loan up to $2 million with no money down if you're buying a house. We can get exceptions to that if we have good qualifying, good parameters. $2 million for us, other lenders might have 1.5 million, some might have 2. That's a lender qualification. Here's another big deal. Conventional jumbo, we need reserves. So if you have your principal, interest, taxes, and insurance payment on the house that you're buying or the house that you're financing, plus whatever other homes that you have, you need to have that amount of money in a multiple in the bank when you close a loan. It could be 9 months, it could be 12 months, it could be 18 months. Sometimes it varies based on your credit score. On VA, it's the standard VA guidelines. We don't need any reserves when you're done. Now, that doesn't mean that that's not the right way that you should go. In my opinion, you want to have some money in the bank, but if you're required to have reserves over here and you're not required to have any over here, you can see that bucket is much bigger for someone to fit in to qualify. Another big deal with VA compared to the conventional is if you've had something derogatory happen on your credit. So derogatory would be if you had a bankruptcy, either a Chapter 13 or a Chapter 7, or if you had a foreclosure on a property. So on conventional, the waiting period from something like that happened to you, depending on what it is 4 years or more. Up to 7 years you might have to wait from something bad happening to your credit. In VA, it's as little as 1 year. All right, 1 year past, it's a Chapter 13. If you've been in the Chapter 13 for 1 year or more and you can get approval from the trustee, you could still do a VA loan. 4 years to 7 years over here, as little as 1 year over here with VA. And then the appraisal. Here's a big deal when it comes to appraisals. On conventional jumbo, you do need an appraisal. VA, you need an appraisal. But on the conventional jumbo, you might need 2 appraisals depending on the guidelines, right? So if you possibly need 2 appraisals over here and you only need 1 here, that's a big benefit. On top of that, there's another situation that is more beneficial in VA when it comes to appraisals, and that is this thing called Tidewater. So if we order the appraisal and the appraiser goes to look at the property and they're trying to establish value and they look at it and believe that it is not going to come in at the contract price, all right? So let's say you're buying a $2 million house and they look at the property and they say, hey, it looks like this might not come in at $2 million, it might come in at 1.9. They don't tell us. They invoke what's called Tidewater. So they send a notification to us. We then notify the realtors. We have 48 hours to provide comparable properties back to the appraiser so they make sure that they haven't missed anything, right? So now we provide all that information and they establish their value. It's not a guarantee that we're still going to get the value we need because value is based on comparable sales, but we have another bite at the apple to establish value. And oh, by the way, if it doesn't come in at value and we want to ask the VA, we can ask for reconsideration of value. That means that we have our staff appraisal reviewer look at the appraisal. If everybody thinks on our end that it still doesn't look right, we can request that the VA actually look at it and see if they will give us any more value. So both options, conventional jumbo, VA jumbo, they're great options, right? Either one. But if you have military experience, you have another shot where you can actually qualify for more home easier by using VA than if you use conventional. So it's worth a shot. Your military experience, it's very beneficial. I hope you'll take a look. The thing I tell people all the time is the answer is no if you don't ask. So just ask. Thanks for watching. This is Andrew Vieira, Branch Manager, Wealthwise Mortgage Planning and VA Loans of California.com.